So I'll just give a very brief intro. My name is Mochizuki. I'm the CEO and co-founder of FundSurfer.com. We're a next-generation funding platform. It's a fancy way for saying that we help clients get money. That's basically it. We haven't done anything revolutionary. We've pinched the bank's model of working with clients from cradle to grave. So we provide a pretty unique blend of funding options. So equity, debt, access to family offices and VCs. We also do crowdfunding. And dare I say it, we are entering the magical world of ICOs very shortly. So we'll be offering ICO crowdfunding. But what I thought I'd do today, Z asked me just to talk briefly on impact investment. So I'm just going to run through a bit of a sort of an introduction into impact investment. It's an area that we've been looking at for years. I set up a number of organizations that were essentially social enterprises back in the day where you were either a charity or you're a business for profit, and there was nothing in the middle. So I've been a fan of social entrepreneurship. I'm really happy to see it developing. And impact investment, for me, is the next step, really, that enables mass participation in social change. Anything that has an environmental or a social benefit, we feel very strongly about as a company. We think that this really is the future of finance. It's where we're going. But unfortunately, it's small beer, really. The whole market in 2016 for impact investment was 60 billion, which sounds reasonably impressive, but not when you think of the $221 trillion financial services market. So there's a long, long way to go. And when I think impact investment began, I'm not sure that people like me realized that the big guys going in would be Goldman Sachs, JP Morgan, Morgan Stanley, the usual suspects. And there's a lot of social entrepreneurs I talk to this about, and they get a bit rage-filled, frankly, where they say that's not how it's supposed to be. They're just coming in cynically because they can see that, yes, it's slightly below market returns, but hey, let's chuck $1 billion in. I don't actually have that same opinion on it. The way I see it is if we can get money into projects that have an environmental benefit to the world, to people, that's all good. So I'd take Goldman money, JP Morgan money, no problem at all. So let's talk about the key characteristics of impact investment. So intentionality. The investor's intention has to be to have a positive social or environmental impact through making investments that are essentially, that is essential. That's a key part of it. Like I said, we're not sure if it's the same model being followed by JP Morgan and those guys. We all know about Jamie Dimon the other day saying that Bitcoin is for thieves and murderers, and then within 24 hours JP Morgan Securities ploughed an enormous amount of money into Bitcoin. So I think we all know what's going on there, so I won't cover off that too much. So impact investments are expected to generate a financial return on capital. So this is not money chucked into a pot never to come back. The impact investment clients that we have, they've got to have a strong business plan, they've got to have a strong business model, and they need to have a strong founder team. Just like any other company or any other CEO or any other business, you need to have a good story. You need to be able to present that. So you've got to be able to generate some kind of financial return. So what do you need to have in place for impact investment to work, for it to grow and for it to develop? Well, I'm hoping there's a lot of people in this room that this matches with. Professionals with relevant skill sets, we need those. Research and data is increasingly important. Big data is something that we all talk about a lot. I pretend to understand it, I don't really. I just know there's lots of data, we need it, we use it, that's it. So what needs to happen moving forward is we need a more sophisticated approach to actually measuring the impact from impact investment, and that is where big data can play a part and can actually develop. Can you see a show of hands? Does anyone know about the GIN Group, the Global Impact Investing Network? Brilliant, well now everyone else does, so go and check those guys out. So they are actually putting in roughly 60% of all impact investment in 2016 came via the GIN Group. If you actually have a look at who's involved there, it's a bit of a who's who within philanthropy. There's a lot of big people in there, a lot of big players, and it's something that everyone needs to get behind and push for us to really see what we want, which is for this to become a much larger market than just $60 billion. So For me, what's really fresh and distinctive about impact investment is essentially the idea that there is a third way between conventional philanthropy and for-profit investment. So what we did is teamed up with an impact investment network that were able to put together a social housing association. They chucked it up in 3 months because they're amazing. And we've actually been offered 50 homes by Bristol City Council for an undisclosed, incredibly low scratch rent for each property for us to develop, renovate, and then actually rent out. So we've teamed up with the housing associations locally so we can actually get these houses flipped and get them actually into the people that need them. So to me, that was a great example where my client was a local builder who only worked on luxury homes. And then he started working with me, and I said, okay, we raised £250,000 for Syrian refugee projects. We've secured 2,000 tons of aid. I showed him what we were doing. He said, look, I'm a builder, I can help. I want to go to Dunkirk. I said, yeah, but buddy, it's pretty heavy out there. I'm not sure if you do. He's like, no, I do. Okay, so we sent him out there. He came back and said, okay, I'm quitting my job as a luxury home builder. I've got 50 staff. I'm converting my entire company into social housing, supporting refugees. He's completely turned around and he's driving it forward. So that was someone that was for profit, 100%, never considered doing anything around social housing or supporting it, impact investment in any way. And on a local level, he put all that together and it happened. So locally, impact investment can have a massive, massive impact on supporting projects that need funding. And I think that increasingly we're seeing a massive opportunity. And if we're going to move forward together, and I think we can all agree, we've got to share more, we've got to work together in a more cohesive, targeted way to support these kind of projects. There is very much a high risk, low return sweet spot of impact investment, and this is coming from Willy Food. If you don't know Root Capital, he is basically one of the first guys. They activated 150 million from investors to help 300 high potential projects in Africa and Latin America. But the main fuel for this is still private capital. So it's essential that everyone understands what impact investing is, the ultimate potential of it to drive forward social change. I've only got a minute or so left, so I'm not going to go through this whole presentation on impact investment, but if anyone wants to come and find me at the end or speak to Z through the meetups, I can send you over some information on that. And anyone got any questions on impact investment, or do you want to leave it for the panel? Z?
One question. Go for it.
Well, I'm really interested in impact investing, and there are, like you say, big players are also very interested in it. What do you think about, for example, the ET exchange-traded funds that some of the big players have come out with to kind of invest in certain companies that are having an impact, social impact?
Well, for me, like I said earlier, I really don't have a problem if the money is coming from Goldman Sachs, JP Morgan, Morgan Stanley. If it's having a positive benefit for the world, I encourage it wholeheartedly, because we need all of those guys. We need family offices, we need private investors, we need a whole range of people to support impact investment for it to succeed.
Something that you mentioned when it comes to remember all of us that the money always comes from private hands. What's usually the number they're looking for?
Well, for a project, it varies massively depending on, it could be a $500 micro loan to a small, business in Africa or Asia or South America.
What I mean is, what's the return the investor would be expecting?
Again, completely depends what the project is. Jeffrey, you want to pick that one up?
Yeah, you know what? Positive social impact investing, you need to get a market rate of return. I mean, if this is really going to work, first we started off with negative social impact investing. but really divesting, right? South Africa, a lot of U.S. Universities, things like that, divested South Africa. That's like negative social impact de-investing. That was the start. So you know what? We'll just go into the regular market. They're going to earn regular rates of return, but they just they divested from headline risk or social impact risk. Now the next phase of this, then you have all the charitable activities. Well, I'm U.S. Capital. We love charity. We give money away.
Jeff, you're coming up here. You're next.
Yeah, okay, I'm next. But anyway, look, I love this topic because it's more of a revelation of who people are rather than a new thing, right? So we love charity. We give money to Indian schools of poor Indian girls, you know, I mean, for over a decade now. And then Food Bank in San Francisco, we're good regular donors there. So we love that stuff. And then when you look at social impact, there's been a whole buzz around it, but it's a decision-making process. It's not a new sector, right? Do you invest in guns and ammo, right? Look, I mean, for our bank, we'll have you look at a transaction, there'll be you know, most of our staff are vegetarians, right, for some reason. So you look at a project like a hog farm in the Midwest, right? Pollutes the groundwater, you're going to make 10, 12% return. We won't take that deal. But on the other hand, you've got some renewable energy project that makes 10 or 12% return. That's positive social impact. You don't have to sacrifice rate of return, you just have to make a decision. And that's where I think it's coming from now. So you should expect market rates of return. You should analyze the project. The areas, the edges of social impact are gray. I mean, village job creation, positive social impact. So you've got what I like in here, the London, what I saw was a bike shop, coffee shop, which is probably a normal thing, but I don't pay that much attention. So when I see it, I thought it was unique. And I thought, okay, positive social impact? I don't think so. But wait a minute. The guy that started that concept, and then he opens a dozen stores in all these little villages, creates jobs, right, and things like that where there are no jobs before, whether it was corporate Starbucks jobs. You know, that's positive social impact. You can't deny it. So is it, you know, you're not like feeding starving people, you know, in East London or something, but it's positive social impact. So I think we need to broaden our perspective, expect a market rate of return, and just look carefully at the opportunity. I mean, we see real estate deals. Now, you don't have to go all the way into, you know, council housing. We do deals in California now that have a 20% mix affordability. So the state backs and the government backs these deals, and they go, you know, 80% market, 20% needs to be affordable worker-type housing, same quality of apartment, right, mixing the community, but it's kind of government subsidized, some of the bonds are subsidized, really cheap financing. Positive social impact, affordable housing in a neighborhood. But you don't have to build a block of, you know, council housing to do that. So I think we need to change our perspective or get a little broader perspective on these things. And I'm not so sure we can come up with some matrix, this is social, this isn't. Some of these are personal decisions, right? So I think we need to look carefully. Is it going to create jobs? Does it not have negative impact? I mean, that's the first thing. Is something wrong with it? Is there something good or bad about it, right? And if it's kind of bad, just don't do it. But if it creates jobs or creates affordable housing or kind of re-engineers communities and things of that nature, then we call that, at our bank, we call that positive social impact. And you know what? We expect market rates of return for that. So I don't think there's an impact this time. Now, there's an impact premium. Tesla, for instance. Now, you see the talking heads on TV. I'll stop after this, but you see the talking heads on TV, you know, we don't know why Tesla's overvalued. We just don't get the fact that, you look at the market cap and you look at the earnings and it's worth more than GM. What the heck's going on? We don't get it. It's overpriced, sell. And then I look at that and I said, well, I have a Tesla. And, you know, there's a social impact premium on that stock. Because when you back Tesla, you back Elon Musk. He's a forward thinker. You know, he's created a stylistic electric car, which is getting a lot of traction, which at the end of the day will create less, you know, hydrocarbon pollution. So there's a positive social impact premium on his stock. But unless you think in terms of social impact, you won't look at it that way, and you'll just think it's financially overvalued. But there are people that like this, a cult following, so to speak. And it creates a margin, a positive impact margin. So I think we should expect those things rather than expect some discount or, and I look carefully at your charitable giving, very important. Give money away, right? Just give it away. That's charity. We should allocate for that. That's charity. Social impact, you need to make money. It just needs to be a business that's run by somebody who knows how to make money and has a business plan that makes money. Because unless those things are positive in economics, they're not sustainable. So that's my view. But we think about it a lot. So
yeah.
It's not.
I think we see it in a very similar way, don't we?
Yeah.
There's got to be a strong business plan. There's got to be a strong model behind it and a good story.
Sorry, just one question for you guys. So I'm in sort of cryptocurrency. From Wirex, we were one of the first sort of Bitcoin debit banks that processed over $1 billion in transactions, transferring Bitcoin to dollars, pounds, euros. What sort of? I've heard you mention briefly sort of ICOs, initial coin offerings. Anything in particular that you guys are looking at?
Don't get me started.
How long we got, Jeff?
How long do I have? How long do I have?
Oh, okay, well, sorry, but
No, that's all right.
Anything that that you feel excited about, or maybe we talk about it afterwards. It might be a better option.
I don't see. Look, blockchain ledger. I see a tangential positive social impact from that only because it's a cheap way to hold an asset, and you hold it. So when it has broader acceptance, you'll be able to hold the title of your car, or some private security, or something in a very secure, easy to transfer, and a known way to hold title. That's the value. The transactions in that to change ownership will be very inexpensive. So I think there's some value there generally. Mostly it's just general economic value. But in and of itself, there's no value. Its only value is a record-keeping system.
Well, yeah, it's from my point of view, I would say that it is. It will change a complete and entire infrastructure of sort of databases and systems that we use today. From a technological perspective, it's like comparing sort of email to a fax machine.
I get it, but look, the tech guys rush in and they say, we've really got something tricky, and we're going to disrupt all the other guys, right? And at the end of the day, the other guys are going to make tech a commodity.
Well, it's true, but I mean, at the same time,
and it's going that way already.
I mean, I kind of get that, but I mean, at the same time, 25 years ago, you spoke to people and you said, oh, one day sort of email is going to replace the fax number on your business calling card.
Dude, I'm so old.
They would have laughed.
I am so old. I am so old. I had the first fax machine in my industrial block when I ran an aerospace company.
Do you use it anymore? That's the question.
I paid $2,000 for that.
Yeah, I know.
Back in 1970 something.
Exactly.
Okay.
Exactly.
Now you can't even give them away.
And I imagine how much you'll save on spending.
My neighbors used to come over and borrow.
Exactly.
Yeah, so I mean, it happens fast, but it changes quick too, and it becomes a commodity, and then it's worthless. Essentially, fax machine. Now it's fax.
We can pick up later on, buddy.
Anyway, but I get it. There's value there, but it's really in maintaining records. I mean, houses, title. What is that medieval system of maintaining record of who owns the property underneath your house? That's ludicrous. That all should be blockchain later.
And now in Sweden, the Swedish land registry have put all landlocks on the blockchain already. So.
Yeah, there you go. I mean, and then there you go. So it's big. It's a big deal.
It's only the beginning steps. This land registry, but I'm talking entire infrastructure.
Yeah, you can
internet, databases, everything.
Pursued a buddy of mine said something because he didn't like Bitcoin that much. He liked real gold, right? because Bitcoin, like when the power goes out, you lose all your stuff.
There's going to be generators, there's always going to be satellites, there's always, you don't need much infrastructure.
You talked a bit about how impact investing at the moment is still quite niche and very much private market. What do you think is going to move the needle there? What's going to make it go mainstream into public markets?
It's a good question. I'll pick that.
So I think really what needs to happen is to have governments, sovereign wealth funds, pension funds open up, institutional funds open up, and to plough more money in. Really simply, that's the quickest answer I can give. It needs more backing from government, business, individual to keep pushing it.
Completely disagree.
Okay, counterpoint.
Completely disagree. No, you need deals that make economic sense, that have social impact. And then the money will rush in from all sectors. Because I am tired of hearing about deals that make no sense, and they come up with some cockamamie ICO to raise money, and then you look at the underlying deal, and the guy set up his LinkedIn account 30 days ago, never done anything. His team is nobody, you know, but it's a sexy way to raise money. That's not a substitute for a business that makes sense and that will make money for the investors, and that's the key.
But it's not just about transferring money. I know about one project. They're gonna quite like Wi-Fi, and you can share it with other people. So it's like a whole new way of thinking. It's like the sharing economy. So if I have like my Wi-Fi, this device, hardware device in my home, I can share it with my neighbors, and and they can earn money from it, and I can share with people who are passing by, and so you can put it pretty much anywhere.
Well, because you can track the ownership.
Yeah. So
You
it's
can
not
hack
like
it.
So again,
it's not just like
it's tracking
it's not just
control of the asset.
exchange. Yeah.
Tracking control of the asset.